Hello there traders, petar.jacimovic here. I just want to do the update on the USD Japanese yen currency pair in the most recent activity. So basically what is happening here on your Japanese yen is basically the price went and gapped about 50 pips. So there is a bullish gap of 50 pips. Anyway, as I said, this is a very important levels around 113 and 113.20 because we got a major 61.8 there Fibonacci retracement. We also got a swing lows from this point here, which right now may act like resistance. And prices, went above 50 and 21 simple moving average. But as I said, the position of the average is not anything bullish. So we have a neutral 200 simple moving average, and we have a bearish 21 simple moving average, and 50 is also kind of neutral if we see the position of the averages on the daily time frame. Now still I expect the same thing. Still expecting the retest of 110.87, which is the swing low from the most recent swing low in the background, and again the targets at 108.20 and 107.48. Now again, there is a breakout, the rising wedge in the background, and we are in the trading range. Basically, a very, very strong trading range here in the background. So there is a still, again, chance that price can go lower and test our soft targets at the low of this trading range. Now, in my opinion, what the professionals and market makers are doing is trying to they will try to get out most of traders who still expect the same thing, but they want to try them and make them maybe even close position and so on, and maybe even change opinion before they establish their large positions. So I will go to 15-minute chart. So you can see this gap here. There is a gap here. Price basically closed on my platform at 112.16. And price basically gapped in 112.67, so around 50 pips gap. Now price also continued to go higher in this point here, and seems like the buyers, wants this higher. But in my opinion, this is a crowd buying. This is not, in my opinion, any significant buying by professionals. And what we expect here is basically maybe the price can basically go and retest. I put some channels here active at the point, and we may see the testing of the median line, potentially testing of the lower line if we see the breakout in this median line, which is around 112.50. Let's call that way. Now, price already did some temporarily, the most recent swing low, low high low, and we see that price refused to test the median line here. So with some channeling analysis here, and we see that basically the price may go lower, potentially try to test the median line of this major channel, and then if we see enough power, the price may also go lower and test this lower diagonal of this channel. Now the interesting point here to mention is to go to the future chart, and I want to explain this basically. So what I did here is they used the the gap basically, and they gapped, and they on that way they scared basically the most of traders. They scared with this maneuver. This is one of the maneuvers what they do, but in my opinion, we should see the cover of this gap and potential recontinuation of the predefined, in my opinion, fundamental conditions and intermarket conditions. So, as I said, if you check the volume and the volume activity in the futures market, there is nothing here to actually affect. This is a 7-minute chart basically, but watch the volume is relatively nothing special happening. So if you see this, as we spoke about last week, this is a breakout of trading range, which confirmed a trap. What they do is just another trap, in my opinion, using the gap basically the gap technique to try to get rid of the positions. This is just another way how they can clean weak traders and traders who don't have predefined to clean the weak traders, or maybe traders who hold positions overnight with the tight stops and so on and so on. You know, over the weekend, right? So in my opinion, this is just another way of maneuver. And as I said, they can do many times this different kind of maneuvers to basically take most of the crowd and most positions off before they start to establish their major positions. And in my opinion, if my analysis is right, basically, we should expect strong Japanese yen this week and in next period as well. Especially we got the news events and ADP non-farm employment change and so on during this week. So we got some also high impact events potentially which can create a larger volatility on the US dollar basically. And right now it's all about the patience and waiting basically the positions to develop, you know. Even I'm still in positions for weeks. That's the process you must you must go through if you're a position trader. So price will not go immediately or it will go very fast in your profit. That can happen from time to time, but mostly it's about sitting in a position and you know, having your fresh mind and understand and follow the price and so on. And if you don't see any big changings in fundamental aspect and sentiment, then basically you just sit on this and watch. And I have my predefined stop loss, you know, and so on. But again, I'm still bearish, and I will mark again from 112.75. This is my entry, and I was bearish. Prices even above right now, but I'm not closing positions just because the price back here. And you know, right now I'm sitting in a small minus. So this is the thing that you need to understand, that you basically must you must have fresh head and understand that, especially position trading, this is absolutely normal that they try to get rid of most of traders before, for example, some larger activity from them. So professionals, market makers, and they will do all different types of maneuvers. You just saw one of their techniques using the gap. It's because naturally most of traders jump to the sell positions here, right? When they saw that this is a big selling, right? And they jump here in selling. Now, how you can clean them, especially most of them having the stop losses above this swing high. I will mark that, this swing high. Okay. Now, how you will catch these stop loss orders? So one of the ways to see, especially when this drop happened on Friday, they basically get higher and try to close the stop loss orders by these sellers who basically sold in this point and maybe placed stop loss orders above this swing high, which what they're usually doing. And price took care, and price went 20 pips higher just to take potential stop loss orders of them. And even if the stop loss is 50 pips higher, the price will go 50 pips higher if there is a lot of stop loss orders awaiting there, you know. But the point is, this is one of their market maker maneuvers. How they do, this is how they operate. So, and it's a, you know, reading that you're not afraid, because you got your sentiment, you got your fundamental picture, nothing changed there is, you know, and you know that this is a more likely, it is a just trap for these traders who got a tight stops or obvious stop loss orders and bad entries. For example, someone who entered on this bar or here, and he wanted to hold position over the weekend, and he, you know, over the you know, the weekend, what happened is basically, bam, price went 90 pips, and you know, potentially clean most of these stop loss orders, you know, and that's a professional side of the game, you know, and only if you're a position trader and you understand the fundamental factors and intermarket factors which affect exchange rates, and you have your predefined fundamental analysis and sentiment analysis, then you also understand the good timing using the technical analysis and so on. Then you have the chances to make success, you know. Otherwise, they just will, you know, hunt you basically because it's obvious how the crowd is positioned, how the crowd position themselves. So it's very obvious to catch their stop loss orders. You don't need to be guru to understand that there is a lot of orders, sell orders from this point, a lot of orders, you know. And now, because there is a big risk of re-establishing selling positions from that point by professionals, maybe even they started, maybe even the professionals basically started this selling. That's probably it, right? As we said last week. But the point is, they didn't want to add more, and market makers basically did their job in hunting these crowd stop losses orders. Even the position traders maybe are still sellers, as you see, I'm still holding sell position from 100 to 75. You know, even the price is going versus me. That's a temporal moment, and if you understand the reasons behind, and if it's your reason of entry fundamental reason, and you know, plus technical, then you don't need to worry about you know, you just have your stop loss in the place, your risk control in the place, and you understand this is a more likely to just trap for the crowd before we may see another blocks of sell orders in your Japanese yen. So this is analysis I want to update you, and we'll see in coming week, in this week, what will happen basically in the next days. I hope basically you enjoyed, and you know, I still suggest you to watch for selling opportunities, and since the buying is very limited in risk, in my opinion. We also show in the futures market there is no high activity basically there at all. So there is no strong volatility in this downward moment, you know. So this may be only price back here to retest these lows in this area, and then price may try to cover and fill the gap in the futures, and yen may strengthen in the next period. Will be all for this video. I hope you enjoyed. I wish you good trading, trade safe, and bye bye for now.